Welcome to Ejisco Tech TV, where we dive into most exciting trends in technology with a special focus on Africa.
All right, so today we'll be looking at trading fundamentals, understanding the fundamentals of trading, which is very, very important in cryptocurrency trading. We'll be looking at a lot of things over the time, but today we are stepping into some practicals of cryptocurrency. Now, one of the things we're going to do is to be able to understand how this thing work and how we can take advantage of it. So, what are the foundations of crypto trading? So, how does the market works? First of all, you must understand how the market works, how the structure of the market is. It helps you to be able to dive into the market. Like I said before, there are a lot of people who go into the market when the market is on a bull run. Just like a lot of people are waiting right now for the bull run to start. But you don't wait. There are market movers. Some people don't wait. They look at the market, they can determine where it's going. And once you determine where the market is going, you can be able to buy, even when everybody is afraid. When there is bear market, everybody is afraid to buy crypto. That is when some people who have understood the market over time, that is when they start buying their cryptos. So what are the market structures? One of the market structures of cryptocurrency is that the crypto market operates 24 hours. Unlike the traditional stock market and the banking system, so they operate 24 hours. So there's no time is too late, no time is too early. Any day, anytime you wake up, the market is trading. There's no holiday. So there are two platforms you can trade cryptocurrency. Centralized exchange are platform where you can trade cryptocurrency. So we also have decentralized, which I mentioned before. So decentralized exchange like Uniswap, PancakeSwap, they have all kinds of decentralized exchange. A lot of people don't know how to use decentralized exchange, of course. But we're going to look at how we can use these platforms to trade, to make more profits in our crypto journey, right? So now another thing I want to talk about is market liquidity and order books. Liquidity refers to how easily assets can be bought or sold without affecting their price. Okay, so like a lot of crypto right now, they have liquidity. Some don't really have much liquidity. So now, before you go into the market, you have to check their liquidity. I think during the coin market cap, we're looking at liquidities and all that, right? So then we have there's key market participants. Now, there are retail traders. These are individual investors who buy and sell cryptocurrency to personal profit, just like you and I, okay? Though also we have institutional investors, like large entities. Like these institutions, they buy a lot of cryptos in millions of dollars. They are like the market movers, right? So some individuals have the bulk money to buy, but institutions buy a lot of coin to keep, especially Bitcoin, right? So we also have miners and validators. I don't want to go through much all these ones because we have treated them before already. So we have miners and validators. These are people who participate and validate transactions on the blockchain network, and they get reward for exchange. Okay, so then we have regulators. Now, many countries try to regulate this whole thing.
Connect with us at Ejisco Tech TV for more insights, resources, and opportunities. Together, let's harness the power of digital transformation to create lasting impact. Don't forget to like, share, and subscribe, and also visit us at agisco.com.